Recently, I received this question. Are we approaching the last cycle expansion phase? And I would say that the last cycle expansion phase has already happened between 2020 and 2021 right here. And we're going to learn how to recognize this euphoric phase. And I like what John Templeton said. He said that the bull market are born on pessimism, grown into skepticism, matured on optimism, and die on euphoria. And euphoria market also refers to the last cycle expansion phase. And in today's tutorial, I'll walk you through the four stages of pessimism, skepticism, optimism since the '07 and '08 crisis and till today this euphoric stage, who had died, and what will be its next move. And in this illustration, we can apply to other markets as well and different time frames like the minutes chart. But before we get into this discussion today, please do take some time to read into the disclaimer below. Now let's get started by looking at what I've indicated, the four stages on pessimism, skepticism, optimism, and euphoria. Now, in this pessimism stage, usually only the top 3% of the investors will have the confidence to get into the market. And that will leave us to the next progression of a bull, where is the skepticism stage. And this will be the next 7% of the savvy investor, and pessimism plus skepticism total 10%. And these are the cream of the crop investor. And they're seeing something that not many people have the confidence to get into the market at the initial bull market. And then we're going to move on to the optimism stage. And I would say that around 20% of the investors will do their studies and get into the market. And then towards the last, it will be the euphoria stage. And this will be the rest of the 70% of the formal investors, where they will chase after the market, that they are the one that created all this hype, whether it's the stock market hype or the other assets like Bitcoin that we're seeing here. Now, let me just bring you phase by phase. And again, it can be applied to other markets and also a smaller time frame. And what we're seeing here is the monthly chart. Now let's go back to the '07 and '08 crisis. And before the QE 1, 2, and 3 that being introduced, what was the crisis that triggered this '08-07 crisis? It was because of the subprime crisis. That's the first leg. As we could see here, it developed to a Wall Street meltdown, and the final leg, it was a Lehman crisis. And after the Lehman crisis, Fed came in with QE1. That's in November 2008. And at the point in time, I think if you are already investing or trading, many of us do not know what is QE, what is quantitative easing. It was a new term for all of us, including myself. Even with QE2, we're still scratching our head what exactly is quantitative easing. And with QE3 in September 2011, not many people are certain what is it all about. And that's pessimism. And let me just explain what is pessimism and why only the top 3% investor will have the confidence to get into the market. Now, it refers to a negative sentiment or outlook in the financial market where investors expect declines, unfavorable condition. It leads to hesitant investing. It's only the top 3% who know stuff, who know their stuff, and they really read into, they understand that what is QE basically is a printing of money. It releases a lot of liquidity to the market. That's the top three. Now that will lead us to the next progression of things, where is the skepticism stage. Now it refers to a cautious and doubtful attitudes towards the financial markets and investment opportunity. Now, skepticism investors seek for more evidence before making decision to protect their financial interests. Now, they may know something, but they always say, do we have other evidence to support? And that have left the other, I would say about the 90% out of the market. Only the next 7% who take by faith and the confidence to get into the market. So, and that will lead us to the next stage, the optimism stage, where I believe the 10% plus 20%, and these are the top 30% who get into the market before this euphoria. Now, optimism stage refers to a positive outlook on the financial market and investment opportunity, driven by factors like strong indicators, positive news, and an expectation of growth. And having said that, it's just the other 20% of the total investor or traders community that it will lead to an increase in market activities and potentially higher prices. And that will lead me to the mass market of the balance of the 70% investors and their behavior, which is called the euphoria stage. Now, it refers to an extreme state of excitement and optimism among investors and leading them to inflate the asset prices and a disregards of risk. Now, it often occurs during market bubbles or speculative frenzies and is followed by a correction or downturn. And we just saw that. And that was since 2022. This is what I call the first crack. Now, let's study a bit closer to the euphoria, rest of the 70%, FOMO investor and traders who chase after the market. And we all know that for the last 40 years, the inflation numbers has been stay at about 2%. And at this point, we could see that it's already double of 2%. Double of the norm is at 4.15%, but yet the FOMO investor, the 70% of the community, will want to chase because they have the fear of missing out. Up to a point, 6.8%, they switched to other asset classes like the Bitcoin. And this was exactly the same period in November 2021. Bitcoin hit the highest point at 69,000 and then Bitcoin collapsed. So is the stock market, the Nasdaq, Dow Jones, and S&P or Russell, you name it. And this is what I call the first crack. And able to recognize all these stages that I just mentioned at any particular point, it helps me to determine whether to take on the market with some risk or not at all. At that point, we could recognize that it was euphoria stage, and personally, I'm not particularly interested to take on a long-term hold position. But I do not mind to trade them. And this is what I call the first crack. After we can recognize that it's the last stage of this euphoria, and this is what I call the first crack, is deep. It was deep. And recent up move, I would say that it's a retracement, and we've got to be very careful because the bank run crisis seems to be over and the inflation seems to be taming. It seems to be, but I'm not exactly sure. I'm gonna eyeball like a hawk, and any situation is that move down, I will liquidate again, and perhaps I will turn short. And how can you turn short the market? You can consider some of the derivative market that's available, and I will include some of the information and its links in trading and hedging into different types of Nasdaq index futures. And I like what John Templeton said, that this bull stage that we just discussed, I like it so much, and I've been waiting for him, but of course it's no longer around, is that a bear market statement. And I have coined this myself, and we're going to discuss that on the next tutorial, is that the bear market start with greed and followed by confusion, sell on fear, and it ends with hopelessness. So once we can recognize, we will know where the bear about to end. Just like once we could recognize where the euphoria is, we will also be able to recognize where the bull is about to end. Always enjoy studying the correlation between the markets and to uncover potential opportunities. And I hope today's sharing, it will be helpful in how we invest and trade. Feel free to leave me any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.